6 questions I ask anybody before I ever consider investing in them. We've all been presented investment opportunities, but how do you know it's the right investment for you? I always say bet the jockey just as well as the horse. So in this video, I'm going to go over what the questions are that I ask anyone I invest in before I ever place a dollar. In this video, I'm going to go over the 6 questions I ask anyone that's raising money before I place a dollar in their deal if it's the right investment for me. This will help you define your own investment criteria and the questions you can easily ask to know if this is the right type of deal and if it fits your criteria. So I'm Jeremiah Boucher. I own a company called Patriot Holdings. I've been investing in real estate for over 20 years. And through that company, I've raised capital, over $150 million of capital from investors. And when I've raised capital, I kept finding out these are the critical questions that I get asked. Or when I've made investments with other real estate sponsors, I would ask them these questions because I want to know, are they fully committed? So I call it the 6-point Jockey Test. The first one is, what do you do? Or what is this investment product? And if it's not simple, I don't want to invest in it. If they can't clearly explain it, then obviously they can't run it, operate it, execute on it. I look for clarity. If they can simply explain it, then I know they understand it, and then they have a higher probability of executing on it. Plus, I want to know what the product or service does. If I can understand how a consumer, a tenant, a customer would use it, then at least I have a better understanding of what the business is supposed to do and how it generates profits. How much skin in the game do you have? This is the critical question. If you're going to ask anyone you're thinking of investing in, this is the most important question. How much money do you have in the deal? What do you have at stake? Is your credit on the line, your balance sheet, all your resources? How much cash? Because people are self-incentivized. They are selfish. The more that you have at risk, the harder you're going to work to fight to protect it. That's human nature. We do more to avoid pain than we do to gain pleasure. So I want to make sure that if I'm investing with someone, there is a tremendous amount of pain that they will feel if they lose. And if they win, I win first. The third thing is, what else are you working on? So if they have 5 different companies with 5 different ideas or business plans, when I consider investing my cash into someone's opportunity, I want them solely focused on that activity, that business, that strategy. Every time I see a founder or entrepreneur that has too many things going on, especially in the beginning of their career, they are never able to scale or execute at the standard that they expect. Singularity of focus. Are they living and breathing the business? Do they continue to compound their energy and efforts on the same thing and learning it over and over through repetition? These are the things that make me feel comfortable when I'm investing in someone. And this goes for me because I learned this lesson firsthand. When I started out in real estate, I started buying houses. Then I went to retail properties. Then I went to apartments. Then I went to try to flipping homes. Then I went to office buildings. And I went to industrial buildings. And I tried every type of real estate. And I realized if I don't focus on a category and I don't focus on a region, then I'm not going to be successful because I can't compound my learning. I'm always starting over with the next product. That's helpful to learn, but when raising investor capital, I'm not going to learn on someone else's cash. I have to learn those lessons myself. And then over time, I realized once I focus on one area, then I can grow to another area or category that's complementary to what I'm already doing. But doing too many things at once is a recipe for failure. Fourth, tell me a time in business when you failed or things didn't work out, and then what you did about it. I love this question because first, if they don't admit to any failure, either one, they haven't had enough business experience or enough of a track record to realize that in business and life, everybody fails. We all have to deal with it. So if they're not battle tested, I'm not ready to invest. If they've been in business a long time and they won't admit their failures, then they're never going to communicate those failures when things come up along the way. Because inevitably, in every deal, in every business, challenges and obstacles always occur. So when you're able to communicate them and then put your resources into solving them and sharing these challenges with your investors, your partners, your vendors, your team, then you can be constructive and progress. But if you're not willing to admit your failures and your ego gets in the way, then that's a challenge and you're never going to grow or learn. And I don't trust my capital with that type of investor. Fifth, who's on your team and why? Great ideas are everywhere. There's a million founders that have good investment ideas or companies, yet execution is everything. And in the world of business and investing, it is a team sport. So I want to know who's on the team, what they do, and why did you choose that person? The team is going to be the one that executes and gets the deal over the finish line or grows the business to the scale that's going to make investors capital. If there's limited talent, no cohesion, no culture, then no matter how good the vision sounds, there's no execution. So do the due diligence on the team first. And then the last one, number 6, is are they willing to risk it all? Is their heart really in this? And this is a gut check. This is your intuition. Are they all in? Are they focused solely on making this successful? Do they have the nature, the demeanor, the passion where they're going to do whatever it takes to make this thing win? And that's where the jockey's willing to die on the horse to win the race. And that's where you get that feeling with that person. You don't have to overanalyze it. You just know, are they going to do whatever it takes to get there? Or do I feel hesitancy or they're not committed? And if that's the case, when things get too hard, when the chips are stacked against them, that's when they fail. That's when they walk away. That's when they give up. And every great entrepreneur, every great investor is always tested. And in those tests, with tremendous amount of pressure, under their control or not, markets can shift, industries will change, things that you cannot control will occur. That's when you know if this person is committed. It's that intangible, like winners win. That's where that person is going to step up. I believe that's the most important thing to look for, and that's a feeling. That's just not a logical question. Now that you know the 6 questions to ask someone if they're raising capital or getting your investment dollar, I want to go over in the next video what are the best opportunities in commercial real estate right now. That way you can also look at the horse and evaluate the opportunity, as well as underwrite the jockey and make sure you're betting on the right jockey and the right horse. Check it out.